When it comes to the realm of personal finance, establishing credit is an essential component of moving toward reaching financial stability. Your credit score can have an effect on many different elements of your life, including the ability to get loans and mortgages as well as the interest rates that you will be required to pay. In light of the proliferation of alternative payment methods such as Klarna, which is a well-known purchase now, pay later service, many customers are curious about whether or not using such platforms might help them grow their credit. The mechanisms of credit building are discussed in depth in this video, as well as Klarna's business model and the question of whether or not it can actually assist in raising your credit score. It is vital to have a solid understanding of how credit building operates before digging into Klarna's function here. In essence, your credit score is a numerical representation of your creditworthiness, which indicates to lenders how dependable you are in terms of repaying loans. The factors that determine your credit score include your payment history, the amount of credit you use, the length of your credit history, the categories of credit you have, and any new inquiries that you have made. Conventional approaches to establishing credit include the utilization of credit cards, the acquisition of installment loans, and the maintenance of a track record of punctual payments. Your accountability is demonstrated with each payment that is made on time, which will, over time, contribute positively to your credit score. Nevertheless, more recent financial firms such as Klarna provide different payment methods, which raises questions regarding the impact these models have on the process of credit creation. Klarna is a Swedish financial technology business that provides a variety of payment solutions to both customers and merchants. The company was established in 2005. Its most popular option, which is called Buy Now, Pay Later, gives users the ability to make purchases and then pay for those items in installments over a period of time. Customers have the option of paying for their purchases at a later date, often within 30 days, or splitting their payments into interest-free installments through Klarna's partnership with a number of different businesses. The convenience and adaptability of Klarna are the primary reasons for its popularity. By doing away with the requirement that instant complete payments be made, it makes the process of purchasing considerably easier, particularly for those who purchase online. Furthermore, it provides transparency regarding payment schedules and does not impose interest or fees for ordinary consumption, which makes it an appealing choice for clients who are concerned about their financial situation. When considering Klarna's impact on credit, one of the most important aspects to take into consideration is the company's reporting practices to credit bureaus. The majority of traditional credit accounts, such as loans and credit cards, are responsible for reporting payment information to credit bureaus. This information is subsequently used into the calculation of your credit score. However, there is a possibility that Klarna and other Buy Now, Pay Later providers do not always submit their payment history to credit bureaus. Despite the fact that Klarna does report missing payments or defaults, it does not always report a favorable payment history. On the other hand, this indicates that using Klarna in a responsible manner, such as making payments on time, would not have a direct and positive impact on your credit score. In the absence of consistent reporting of positive conduct, the potential benefits of utilizing Klarna for credit building are severely constrained. Alternative credit building methods. It is possible that depending simply on Klarna will not be sufficient if your objective is to develop credit. Your credit score can be established and improved by the use of a number of alternative ways, which are as follows. Secured credit cards are available to persons who have a restricted or poor credit history since they need a deposit that serves as your credit limit. This makes these cards accessible to users. In the long run, making payments on a secured card in a timely manner can help improve credit. Credit builder loans. These loans are specifically created for the purpose of establishing or enhancing credit. The money that you borrow is kept in a savings account by the lender, and you are responsible for making monthly payments that are reported to the credit bureaus. You are able to acquire the funds and an improvement in your credit rating once the loan has been paid off. There's a positive correlation between being added as an authorized user on someone else's credit card account and having a positive influence on your credit score. This is especially true for accounts that have a lengthy history of being paid on time and have modest balances. Rent reporting services. There are businesses that specialize in reporting your rental payments to credit bureaus. This can assist you in establishing a positive credit history by ensuring that you make your rent payments on time and consistently. Platforms such as Lending Club and Prosper enable individuals to borrow and lend money directly to one another, and payments are reported to credit bureaus. Peer-to-peer lending is also known as direct lending. One way to improve your credit profile is to make timely repayments. However, Klarna does not have a significant direct impact on credit growth, despite the fact that it provides convenience and flexibility in managing transactions. Klarna's reporting policies, in contrast to those of traditional credit accounts, might not always accurately portray good payment behavior to credit bureaus. Therefore, depending entirely on Klarna to establish credit is not a recommended course of action. It is vital to vary your credit profile and make use of traditional means of developing credit, such as credit cards, loans, and appropriate payment management, in order to construct and increase your credit score. Developing a strong credit history and achieving financial stability over time are both possible outcomes that can be achieved by combining these tactics.